Welcome to another episode of the Investor Guys podcast with myself, Kevin Mills, and Mr. Bill Barnett over there cheering
Good morning,
on
sir.
the podcast. How you doing? You know what? I noticed we didn't get a chance to talk about this before we went on the air. You guys are blazing hot today. Like, looks like 106 is what you guys are expecting today.
Woohoo! Yeah. It's good tanning weather. I need to go out sometime today and catch a few rays and get a little vitamin D input.
Yeah, at 106, you could probably do that wearing a tank top and shorts between the house and the car. So nice and crispy. We're mid 90s, low mid 90s. So
in honor of this Saturday, with I know technically college football has started already. There were some games last Saturday. There'll be a game tonight. But when your school plays, that's really when college football starts for you. For me, that's Alabama. That's this Saturday against Miami in Atlanta, which will be a great game. So I got my Roll Tide cup, got my Roll Tide cufflinks on. So that's excited about the weekend.
For my fellow Buckeyes, that's Miami, Florida, not Miami of Ohio. So,
and how interesting the Little League World Series was Ohio and Michigan.
Ohio and Michigan. That is the big all-time rivalry. It's funny because I still meet people from Michigan and I tell them I grew up in Ohio and they're like, you know what, we can still get along even though we're not supposed to. We just don't tell anybody.
I have a lot of good friends that are, and I've dated for years. I dated literally 5 years, 2 different women that were Auburn fans, but there were little holes in the relationship. When it came game day, most of the time, if it was an early game, we'd hook up later on that night as long as we decided not to discuss game time. Of course, I would have to keep my mouth shut when Bama would win and they wouldn't when Auburn would win. And in the Alabama, unlike Ohio State, Michigan, which has a lot of great, close, back and forth, hard-fought games, Alabama, Auburn, especially the last 10, 15 years, has been very lopsided. We win. It's embarrassing how bad we beat them. They win, and it's just a point or two. They had a kick six, which is now like 5 or 6 years ago already, which is crazy, where literally we're trying a field goal as the game is ending. The clock is expiring, and, you can return a field goal. If it's caught in the air, you can return it. And it was short, but yet went into the end zone and guy catches it and runs it back for a touchdown. They win the game. And so we've had that in the 70s. We had punt, Bama punt, where they blocked on succeeding possessions. They blocked punts and returned them for touchdowns and won by 2 or 3 points. It's crazy. What an incredible rivalry. But right there, Alabama, Auburn, Ohio State, Michigan, and Notre Dame, USC, to some degree, it's lost much of its luster in the last few years, the last 20 years or so. But
and they don't have the geographical. A lot of times it's a geographical proximity. Like I remember Ohio State and Michigan, because Michigan and Ohio State butt up against each other up there in the corner. And you see a lot. You see this in Texas and Oklahoma as well. You see those house divided flags and signs out there. It says OU and OSU, or OSU and UT, or Michigan, Ohio, whatever it is. But on to real estate.
Yeah.
Let's buy some houses to put those house divided signs in front of.
You got it.
You had a bunch of information that you had pulled up over the past couple of days that you wanted to go over.
I had been getting some questions and text and emails about the condition of the market. What's the forecast? Everybody still looks at the market, and look, if you're not in it like you and I are, and most average investors are not in it the way we are, they look at the market as what's going on right now. They look at the market, the 90+% of investors evaluate the market the same way a seller or a buyer would evaluate the market, which is what is happening at this very instant, not what is going to be going on 6 months, a year from now. And so Direct Servicing News, DS News, which is a mortgage service newsletter, came out with this saying, which I told you beforehand, we were talking about reviewing this, that I disagree with a lot of this, but they say the current housing report shows no signs of softening, despite an increase in residential property listings each of the last 8 months. So that's one of those underlying pinnings that an average investor doesn't look at. So for 8 months consecutively, nationally, we've had, and look, a particular market, your market, the Miami market, is still so smoking red hot and there's no inventory. But on a national basis, the inventory has increased now for 8 months in a row. The shortage of home sales remains more pronounced than ever. Home prices continue to rise as the market shows little signs of softening. Data covering through the end of July shows. Now, obviously, we're in September, so there's about a 6-week lag there in information. The latest from Radiant Home Price Index shows that home prices nationally rose month over month from June to July at an annualized rate of 14.7. So through the first 7 months of the year, it's reported the average monthly annualized increase was 10.7%. And has been for each of the last 3 months for those markets, reporting above average appreciation. Radian analysts calculate that the housing price index, based on the estimated values of more than 70 million unique addresses each month, all single family properties, but spread over all type of geographic areas. So they're saying that things are just still smoking hot and staying that way. Now, I'm going to say in our market, and that's all I can attest to personally right now, when I refer to this, because this is going to be with DFW Properties. DFWproperties.net is the brokerage firm that I own here locally. And so I see the market both from an investor side and then from a much more traditional real estate slant as well. But I had mentioned to you this morning, I got 11 alerts for home reduction, prices in reduction. And this has been going on for a couple of weeks where I've been getting many a day. Hey, this we've dropped this 10 grand, we dropped this 5 grand, boom, boom, boom. And again, I acknowledge right off the bat, DFW is a gigantic market, and 11 houses doesn't sound like much, but it is day after day after day. And it is a foreshadowing of what's happening in the market. The market is softening. And what happens is we see all these underpinnings, as I refer to them, to the market change months and months and months and months prior to the general public or the average investor realizing that the market has changed.
Yeah. And we're also going to see a little bit of a cooling off right now, because as traditionally happens as we get into the holidays, the real estate market cools off because people don't want to buy houses. People don't want to sell houses over the holidays. They just don't want to deal with the moving and everything else. And we see that coming up too.
And we got school started.
Yeah, so. But I don't think it's going to change the market that significantly. But we're over on our time, so we'll be back in just a second with more real estate information.
11 months out of the year, Bill and I host real estate buyers events in cities like Cleveland, Ohio, where we ourselves invest and see great returns. We show investors the types of strategies we're using, the types of properties we're using. We introduce them to people here on the ground and the resources that they can use to get started right away. Day 4 of this event, we're actually touring properties and making offers on properties. This event was designed to put properties in your portfolio right away, high-performing properties. Read more about the Real Estate Buyers event. Get registered. We'll see you at the next event, realestatebuyersevent.com.
You want to be a real estate investing millionaire? Be able to buy a luxury car or maybe a nice boat? How about a bigger house in a nice neighborhood? Being a real estate millionaire is a dream come true for so many, and it was for me at one time also. But in a world of $500,000 cars, multi-million-dollar planes, and yachts, and vacation homes that cost in the tens of millions of dollars, why would I settle for just being a millionaire? I want more, and you should too. New for 2022, the Billionaire Training Academy, the only program of its type designed to create billionaires. This program is not about real estate strategies. It's about scaling real estate strategies, starting small and growing into multi-million-dollar deals and beyond. It's about the business of building a billion-dollar real estate empire, setting your business up to do and obtain business credit, funding, and more. Understanding where to go and how to obtain literally limitless funding for real estate projects, and being able to put together the types of high caliber projects that are going to show multi-million dollar profits for your business. This program is about building your business team, business structure, structuring partnerships, and attracting more investment capital than you'll ever have projects to apply it to. This program will show you how to build a billion-dollar real estate investing empire by building the business that will drive it, power it, support it, manage it, and more. This is not an event where we're going to try and dazzle you with light shows and feel-good sing-alongs. This is an exclusive one-week intensive program. This is Billionaire CEO Training Bootcamp. This is roll up your sleeves, get to work, and get started right away. From the moment you arrive, we'll treat you like the CEO, founder of a growing billion-dollar real estate investing company that you are. Come ready to get started, and that is exactly what will happen. Read more and get signed up at thebillionairetrainingacademy.com. That's billionairetrainingacademy.com.
And we're back. And just before we went into break, we're talking about how even though markets are still red hot, we can see that they are starting to cool off around the edges. And that's an indication for us that the market is going to change. Now, even in Texas, which is a white hot market, people are moving from all over to Texas. Texas is blowing up, has been for years. And really, really honestly ramped up even more since coronavirus started. But even in Texas, in a very major market, Dallas-Fort Worth is a major market, not just for Texas, but in the United States in general. To be able to see that cooling around the edges, that's an indicator, an early indicator that we are headed into a cooling off period for real estate. Now, what does that mean for us as real estate investors? Should we jump on it now? Again, it always has to do with numbers. If you buy a property now, is there a good chance it's going to be worth less in 6 months or a year? There is that possibility. However, if you, depending upon the strategy that you're using, if you're buying it to hold for, say, rentals, and your rent is, the numbers are working, it doesn't matter, because whether that value goes down or not, your income is still coming in based upon what you did for your purchase price and what you did for your numbers. That value, will it go up? Absolutely, it will. Give it another 6 months, give it another year, the value will go back up and you'll be fine. So if you're buying these properties to buy and hold, I wouldn't worry about it. Again, as long as your numbers work. If you're buying this on a quick speculation, you think you might want to flip it in a few months, that might be something to consider. You might actually be upside down on your purchase price.
So one of the things that, it's all strategy related. You and I pound. Hey, you got to know the numbers, and the numbers dictate what the strategy options are for you. So we very likely, we've seen it before, and we're likely about to start seeing it again, where the price of the homes is softening and going down, and yet the rental market, the rents are going up. So you can have a rental property where the actual price of the home, the value of the home is going down, but your rent is going up at the same time. Will it come back around? Absolutely. I want to pound this, and this is one of those things that I remind investors of continually. Only during the Great Depression, not during the Great Recession of Obama that he orchestrated, not even during then, but only during the Depression did the real estate market drop enough that it went below where the previous run of pricing increase had started. So right now, what does that mean for us today? So end of 2012, the beginning of 2013 is when the real estate market just took off nationally. So as the market cools, whether it will cool through the course of this year, because it is that we're getting into that time, as you mentioned, holidays, school started, fourth quarter is always the slowest quarter of real estate. So it's going to have a traditional market cooling that happens just based on time of year. And then as we get into next year, it will continue to cool even more. As it cools, you have to remember, just keep a look at where those numbers were. Go back to like the first quarter of 2013 and see where the numbers were. And what you're going to see, if this is the first quarter of 2013, and this is where we are now, this isn't going to happen. This might happen. We might give back about half of that as the market cools. And when it cools, it's getting ready to run again. So, and the cooling period is typically half or less of what the run up is. So we may have 2 years. We could even have 3 years where the market has cooled off, because it'll go down and then it'll flatten and it'll stay flat for a while. And when it's flat is when it's catching its breath and it's about to take off again. But it will not get below where pricing was in 2013. My prediction is we'll probably go back to 2015, 2016 prices before the market starts taking off again.
Yeah. And as anyone knows who invests in anything, whether it's stocks, bonds, futures, anything, where you make the money is in transition. You don't make the money when it's flat. You make the money when it's in transition. And that means when values are going up or values are going down, there are opportunities to make money. On a flat line, it's more difficult to make money unless you are doing something like a buy and hold strategy where your assets are working for you. Again, this is nothing to be disheartened about. This is something to basically get yourself ramped up about and say, hey, I need to change my strategies, or I need to shift gears a little bit, or I need to look at a different track and take advantage of these types of opportunities. Now, before we go on break, this is where I love buying properties in markets like Cleveland, Syracuse, Rochester, Buffalo, where we're buying properties for $50,000-$60,000. Okay. When the market moves, even if it's a significant move, we're not talking a whole lot of money when we're talking about $50,000 and $60,000 properties. We're talking about a few $1,000s in either direction. In fact, what I've seen in markets like the ones we just mentioned, the prices haven't really changed. The demand has changed. I see the properties going a lot quicker, but I don't see the going up that much. So
sorry, my alarm's going off.
We'll go ahead and take a break, and Bill will deal with his hound, and we'll be right back.
You want to be a real estate investing millionaire? Be able to buy a luxury car or maybe a nice boat? How about a bigger house in a nice neighborhood? Being a real estate millionaire is a dream come true for so many, and it was for me at one time also. But in a world of $500,000 cars, multi-million-dollar planes, and yachts, and vacation homes that cost in the tens of millions of dollars, why would I settle for just being a millionaire? I want more, and you should too. New for 2022, the Billionaire Training Academy, the only program of its type designed to create billionaires. This program is not about real estate strategies. It's about scaling real estate strategies, starting small and growing into multi-million-dollar deals and beyond. It's about the business of building a billion-dollar real estate empire, setting your business up to do and obtain business credit, funding, and more. Understanding where to go and how to obtain literally limitless funding for real estate projects, and being able to put together the types of high caliber projects that are going to show multi-million-dollar profits for your business. This program is about building your business team, business structure, structuring partnerships, and attracting more investment capital than you'll ever have projects to apply it to. This program will show you how to build a billion-dollar real estate investing empire by building the business that will drive it, power it, support it, manage it, and more. This is not an event where we're going to try and dazzle you with light shows and feel-good sing-alongs. This is an exclusive one-week intensive program. This is Billionaire CEO Training Bootcamp. This is roll up your sleeves, get to work, and get started right away. From the moment you arrive, we'll treat you like the CEO founder of a growing billion-dollar real estate investing company that you are. Come ready to get started, and that is exactly what will happen. Read more and get signed up at thebillionairetrainingacademy.com. That's billionairetrainingacademy.com.
Once a month, with the exception of December, Bill and I go to markets where we have experience, and we host a real estate buyers event. These are markets that have great return potential for your real estate portfolio. We're going to show you the properties that we buy. We're going to show you where to buy, where not to buy, the strategies to use to make great income from these properties. We're also going to show you resources and individuals here on the ground that you can use to start building your team so that you can repeat this process over and over. The real estate buyers events are designed to put high-performing properties in your portfolio right away. If you're interested in hearing more about the Real Estate Buyers Event, realestatebuyersevent.com. That's realestatebuyersevent.com. Read more about the events, check out the schedule, and register. We'll see you there.
And we're back. And you know what? If you've been watching us or listening to us since we started doing this over a year ago, Bill and I have always, maybe it sounds like we're talking about the sky is falling. We're always talking about, the market's going to be transitioning this way. The market's going to be transitioning that way. Watch for this transition, watch for that transition. But honestly, at any given time, the market's making some sort of transition or another. There is something that's happening in one market or another, or in the overall market that is affecting the market. So whether it's transitioning up or transitioning down, as we mentioned on our last segment, there's an opportunity for us. There's always going to be movement in the market. If there wasn't, we'd be sitting in a stale market and none of us would be able to make any money. So these movements are important to us, and understanding these movements, where they're going, which direction they're going, and what they are affecting allows us to tailor our strategies to be able to capitalize on those movements, those transitions. You had a point that you wanted to make just before you had to put down the hound.
Well, we were in Tuesday's show, we talked about San Francisco becoming the first metropolitan area in history where the median price was $1 million. And then I had mentioned to you off air that I find it a little surprising that of the top 20 metro areas, Atlanta has the smallest or the lowest median price. I found that rather interesting. But look, when you look at the trends in the market and what's going on in the market, think this thought for a minute. What if the market stayed like this all the time? If you had a strategy, I've done a ton of foreclosure investing through the years, and it does this. You know, it's an up and down, and we're about to get into the up cycle where foreclosures are going to be increasing. I don't think near as dramatically as a lot of people like to espouse, but and foreclosures are going to go up, and that's always a great opportunity to get a good value buy when you have foreclosure opportunities going on. And so when that happens, it is just a change of strategy. But if you think for a minute, what if that strategy was always there at the same level of intensity as it is when it is the favored strategy? Well, it would be very easy to hang into the market long enough to figure out how I take advantage of that strategy and implement it to the best of my financial gain. And when I do that, if the market's not changing, it's easy to hit a still target. Well, that never happens except when you're in Section 8, that is a still target. There is so much demand. And as the market turns down, the Section 8 market will get even more demand on it. And we went through the numbers a few shows ago. If you go back, we went through a chart that showed the amount of shortage of Section 8 housing each state and then each major metropolitan area had. And it's huge. And I've been saying it for years, how undervalued, underserviced the Section 8 market is. All of the fears that people have had while they didn't invest are no longer invested in Section 8. I was meeting with a guy here in town who was a real estate attorney, very prominent investor as well, who at one time, 12 years ago, had 200 Section 8 doors. Guy wrote all of them. He's like, it's just too much trouble to deal with. And I was like, wow, I bet you wish you had them back now. He said, well, no, I'd sell them for the same reason I sold them then. And I said, then obviously you're not paying attention. He's like, what's going on? And I'm like, well, they changed the rules on damaging the property. Well, I heard something, but I'm like, well, you're an attorney, dude. They changed, if somebody damaged your property in years prior to about a dozen years ago, you could go after them. But they're in low-income housing. What are you going to get if you get it? You're not going to get anything. They're in low-income housing for a reason. If they were to damage your property, you're not going to get monetary satisfaction for that. So one of the major changes in the Section 8 housing program was HUD put together a penalty program that says, all right, if we go in and inspect the property and find out that the tenant has damaged the property above and beyond normal wear and tear, they have the right, and they have used this to kick that person out of the Section 8 program. And if they kick them out, there is no forgiveness. There is no way to work themselves back into the program. So for people who understand Section 8 and live in Section 8, they know, hey, this is no joke. I got to take care of this place. And so it's made an incredible change in the quality of it's the same tenants. They're just taking better care. So the quality appears to be significantly higher.
And it's more than just a penalty. There's also a insurance there as well. If your tenants damage the property and they don't fix the property, they don't fix the damage, or they don't pay for the damage, Section 8 office has a fund that they will take up to an amount. In Cleveland, it's $800 to repair that unit. If that happens, then as Bill mentioned, the Section 8 tenant is removed from the Section 8 program. They don't qualify for Section 8 ever again. Once that happens, they're on their own. So there is a strong motivation for them to take care of your property, first of all, because they don't want to have to repair it. But if there is damage to it, to repair the property and make sure that it gets repaired. If they don't, Section 8 is going to step up, and they're going to up to $800 in Cleveland. It's different in different markets. Repair the property that was damaged by the Section 8 tenant, so that you're not having to chase after trying to get blood out of a turnip. Lots of safeguards that have kicked in since, just to make Section 8 even better. I've loved Section 8. I've been doing Section 8 for over 30 years. I preach Section 8. Bill knows this. My two favorite strategies in the world, Section 8 and recently vacation homes. I say recently, but last 5 to 7 years, vacation properties. So I am perfectly content living out the rest of my investing years, if nothing significant changes in our world, doing Section 8 and vacation properties. My Section 8 is guaranteed money. My vacation properties, great money, and it allows us to travel. I've told Bill this story. My wife and I are on a strategy where we are buying properties in places where we want to spend time, where we want to vacation, so that we can literally just be in a perpetual state of vacation, just spending 2 weeks here, 2 weeks there, 2 weeks there, 2 weeks there, always on vacation. And it's essentially paying for itself and us in order to own the properties.
Yeah. And it is always a business trip when you are staying in your own vacation rental.
It is. And I will save that surprise for another time, because we're running out of time. But let's have a good thank you to our clients and our people who are watching us. Absolutely. Do so, please. Feel free to share us with anybody else who might be benefiting, or who just wants a good laugh. And not because we're that funny, but we're just funny to look at. Subscribe. Smash the like button, subscribe, get over to your favorite platform, give us a 5-star rating, write something incredibly wonderful about us. If you have a bad opinion, keep it to yourself. Yes, go write it on someone else's page.
There you go.
And you can find all of our shows at investorguyspodcast.com. Thanks for joining us. Happy investing. We'll see you back here on Tuesday.